Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And onto the Buy Now, Sell Now lens, we're going to be focusing on the biofuels and what sort of a big announcement that has come from the G20 summit. But not just that, let's have a look at what the markets are up to. Firstly, so Cheryl, indeed a positive start for the benchmark indices and positive start to the week.
Absolutely. A very good morning to you, Shrishti. And we know all who's actually cheering for Nifty to hit that 20,000 marker. And that is definitely Shrishti, given the fact that she's wearing the shade of dark green. And that's what is reflecting on the markets as well. You have the Nifty that's near the day's highest point as we speak, surpassed 19,900. We are barely actually approximately, I believe, 50 odd points or 50 odd points from those elevated record high levels, or 60 odd points from the record high levels coming in for Nifty as we speak. So yes, we are at a 7-week high when it comes to the benchmark indices. Broader markets have scaled new highs once again. Lifetime high coming in for a mid-cap index, small-cap index, add to the list PS2 index as well. Today hit a record high level in today's trading session. Talking about the list of gainers and losers, you only have right now, as I can see on my screens, only 6 stocks on the Nifty that are seeing a downtick. That is IndusInd Bank, Coal India, Bajaj Finance, Cipla, Sun Pharma and Eicher Motors now actually. They are the only ones that are seeing a tinge of red on the screen. But while you're talking about the gainers, we have Adani Ports as the top gainer on the Nifty, 4% uptick coming in for Adani Ports, HDFC Life, Apollo Hospitals, Maruti Suzuki, Tata Steel. And yes, like I said, you almost have 45 stocks that are in the positive territory on the Nifty as we speak. Talking about the sectoral indices then, and let's see which are the sectors that are holding on pretty firmly in trade today. So that has to be the PSU Bank Index, 0.2% uptick coming in for PSU Bank Index, followed by Metal Index, Realty Index, Auto Index as well. And if you look at the losing end, none of the sectors are losing in trade today. It's just the Pharma Index that is seeing mild bit of gains in today's trading session. So yes, all eyes on the coveted 20,000 mark on the Nifty. Hopefully this week we should be able to scale it, and we are just 60 points away from the record high of 19,991.85 on the Nifty, Shrishti.
Well, thank you so much, Cheryl, for giving us that credit. But let's just cheer out for the Nifty 50 index, and let's just hope that the coveted 20,000 mark we will hit this particular week. But with this, viewers, let's move on. And Prime Minister Modi launched the Global Biofuels Alliance on the sidelines of the G20 summit and said that it marks a watershed moment in the quest towards sustainability and clean energy, which are the key beneficiaries companies. Let's get in more details of that, and Somit is joining us with the list. Take it away, Somit.
Well, on the sidelines of the G20 summit, the Prime Minister Narendra Modi announced the Global Biofuel Alliance. Now, the alliance intends to expedite the global uptake of biofuels through facilitating technology advancements, intensifying utilization of sustainable biofuels, and by shaping robust standard setting and certification. Now, the aim is to foster global collaboration for the advancement and widespread adoption of biofuels. Now, the countries which are involved in this alliance are the names of Singapore, Bangladesh, Italy, USA, Brazil, Argentina, Mauritius and UAE. And all these countries which have signed onto the alliance have good potential in the biofuel space. Now for Singapore, for example, if you see, has a large oil trading shipping sector, and this can relatively easily pivot to ethanol and biodiesel trade also going forward. Now Bangladesh Energy is an energy importer with fertile land and has good potential for biofuel production just like India, and can allow for a creation of a subcontinental biofuels market. Italy has an important presence in the maritime trade and can serve as a connector for the European energy trade. Also, USA, if you see, is the world's largest ethanol producer. When it comes to Brazil, they're the second largest ethanol producer and the most advanced one too. Now, Brazil Energy Minister had recently made a trip to India to discuss the global ethanol trade. When it comes to Argentina, they have a large biofuel production potential going forward. And when it comes to Mauritius, they're an important transshipment location. And lastly, when it comes to UAE, has a significant oil shipping industry which can pivot to liquid biofuels going forward. Also, it can become a large biofuel importer to reduce its carbon footprint and to boost oil and gas exports going forward. Now it comes to the companies that tend to benefit because of this alliance. Firstly, all ethanol producing companies like Praj Industries, BCL Industries, Gulshan Polyols and others. Apart from them, it's Thermax who could benefit because they provide EPC services for biogas plants. Then there is a small cap in a company called Kotak Industries which manufactures and sells biodiesel, could also benefit. Then there is Vinati Organic which manufactures methanol, which is a key raw material needed for biodiesel production. Then there is Everest Kanto which could also benefit because it manufactures cylinders which can be used for storing of biogas. Then there is another small cap company which is EKI Energy Services which provides carbon offset accounting and trading services. And then there is Escorts Kubota which could also beneficiary because it will be an indirect beneficiary from boost in rural income, which we could see if biogas exports get a boost in the country. Then there is one company which could actually see a negative impact because of this alliance, and that is Kirloskar Oil, because that manufactures biogas genset, and analysts believe that increased access to foreign technology can mean lower sales for certain technology providers like Kirloskar Oil. So keep an eye out for these companies in trade and going forward on the back of the global biofuel alliance.
Thank you so much for that, Somit, for outlining all the companies that are likely to benefit and the ones that may not also benefit from this alliance. But earlier in the day, we spoke to Shishir Joshipura, who is the MD and CEO at Praj Industry, who believes that the Global Biofuel Alliance is a significant deal for the entire industry, and the move will also expedite the policy sharing and technological know-how between the nations. Listen in to what else he had to say.
I think this is one of the most important development that has taken place in recent times, inviting a global forum for Biofuel Alliance. And if you would recall, there was a similar success story of International Solar Alliance. And I think the time has come for us, India, to take lead. And that's what is happening under the G20 program. India, United States, Brazil, and 19 other countries have come together to form a Global Biofuel Alliance. And I think this is a very, very significant move, because this means that we are now actually saying that biofuels have a very, very important role to play across the global economies to ensure sustainable development as we go forward in future. And what it means is that the countries like India, United States, and Brazil, who are the current leaders in adoption of biofuels in their economies, are actually telling the rest of the world that come join this journey with us. And that fundamentally, and we will make available the technology, the policy directives, the initiatives, the market mechanisms, the how do we develop the whole ecosystem. So there's a whole host of offerings that can go out of these countries to the rest of the world. Specifically to India, we are a leader. As you are all aware, there's the absolute benchmark program that the government launched about EPP 20 that we are rolling out to ensure 20% of ethanol blending by 2025. And that means, and that's a program that is well on its way to success. We are way ahead of our milestone that we had put for ourselves.
Okay, so that's the whole news and the management of Praj Industries. So the big boost coming in for the biofuel industry. So let's connect with our experts and understand from them which are the stocks that are on their radar. And for this, let me welcome on board Avinash Gorakshikar, Head Research at Profitmart Securities. And we're also being joined by Kunal Bothra. As always, a very good morning to both of you gentlemen. And Avinash, coming to you, how do you see this particular development, and in the long run, as per you, which are the companies that are likely to benefit the most? Because for today, we are seeing great moves coming in on Praj Industries, BCL Industries, Gulshan Poly. They are seen to be buzzing, and even Thermax is up anywhere between 1 to 1.5%. But for the longer run, so that's the immediate impact that we are seeing on the stocks. But for the longer run, how do you see this development, and which could be a best bet amongst them?
Yeah, good afternoon. Good morning, Shrishti. I mean, my sense is that this development in the G20 summit has actually encouraged the use of ethanol, and biofuel is one aspect where India has the technology, has a significant amount of it taken an initiative about a couple of years back. So I think you're going to see a very large export market opening for most of the sugar companies, specifically for ethanol. And as far as the capital goods is concerned, I think there cannot be any company which can outbeat Praj. They are not only into the making of ethanol plants, but they are also doing a lot of R&D on compressed biogas, specialty aviation fuel. So I think going forward, you're going to see a lot of interest coming in for these companies. Possibly some companies could get in large export orders over the next, say, 12 to 15 months. And I think, the kind of roadmap which the Prime Minister Narendra Modi has pointed out, I think clearly points out that, technology access to certain countries which don't have will also be shared by Indian companies. So I think it's going to be a very big opportunity. The markets have obviously rewarded all these companies by, showing a strong bounce back in the stock prices of all sugar and especially larger ethanol players. But I think over a longer period of time, I think these would definitely give a decent risk reward to investors, provided the view is slightly longer term. Because probably for action to start on the ground, it would take some time. But yes, I think the roadmap is very clear. And over the next, say, couple of years, you could see a lot of benefits coming to companies like Balrampur Chini, Rampur Sugar, Praj Industries, Triveni Engineering, which are very large players in the ethanol space.
That's the take coming in from Avinash. A very good morning to you, Avinash. Good morning to you as well, Kunal. And that entire list of stocks is pretty huge if you talk about the sugar companies and the ones that will benefit from ethanol blending. Out of the vast ocean, which one do you think is the best fit?
Well, yeah, there are too many stocks, and I think most of the stocks have gone into a very synchronized price action. Look at the last 3 years, 4 years of history, whether it's Balrampur Chini, the mid cap names in the sugar pack, the small cap names. I think all of them have moved in a very synchronized kind of a manner. But then I would stick to the two formidable names over here. Praj Industries, of course, the stock looking extremely strong, has already broken past about the 2021-22 highs. Around that 470 mark. It's trading with a margin of 20% higher from those levels. Even Balrampur Chini, I think at current levels is poised for a very strong breakout. My sense is that the stock is ending almost 100 to 120 point of consolidation at this 420, 425 mark. So we can expect at least another, such kind of a strong up move of 100 plus points for Balrampur Chini, say in the next 6 months or so. So that could be another pick which one could be looking out for from current levels.
Okay, so that's the take coming in from both of our experts on the companies that are related to this big announcement on the biofuel industry. But with this, viewers, it's time to slip into a short break.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that's flashing on your screen. Do remember to mention your name, the stock that you are looking to invest in. If you have already invested in the stock, then do mention the buy price, the quantity, as well as the time horizon that you are intending to hold a particular counter, because in that way, our experts will be able to help you better. And talking about our experts today, we have Kunal Bothra as well as Avinash Gorakshekar joining us on the show. Very good morning once again to both of you all. And let me kickstart with the queries then. And the first query that I have is coming in from Vidya, who is a short-term trader writing to us from Chennai. And she's saying, Kunal, that as the market is bullish, she's booked out profits in many of the counters and she's holding a huge capital right now. So for the short term, she wants to know where should she go ahead and allocate that money. Do you think now at these elevated levels that the markets are actually trading at, it's still a good time to go ahead and allocate your capital?
Yeah, I think new highs can always lead to new highs for the index as well as for the asset classes, and hopefully this time around we can probably do that for the index, for the Nifty. This time around, the only good part is that the market breadth is a lot more healthier as well as broad-based as compared to maybe the last time when you had a few sectors which were lagging behind. So I'm expecting that this could probably be a sustainable move as well as a hopeful breakout of the 20K mark pretty soon for the Nifty. Now in that aspect, would suggest few names which you can probably consider. Something which on the short-term charts is popping up is Piramal Enterprise. That's a stock which is heading towards a breakout about the 1130 odd mark on the spot levels. You can look at Balrampur Chini. From current levels, the stock is in strong momentum. PSU Bank is something which I believe is heading towards the second round of a huge breakout for itself. So there are a lot of options in the PSU banking stock, and you can probably try and consider them. But the catch with all of these names is that these stocks are high beta, so you have to probably adhere to the discipline and stop loss according to the high beta nature of the stocks.
Okay, so Kunal is positive on the PSU banking names, but Avinash, what's your take on Canara Bank? Raj from Vadodara has bought the shares of Canara Bank from a price of 339 rupees at profits currently, and he's still holding on to this counter. Any targets for the same, and any price where he can actually look at booking his profits?
Bank, I think he can definitely look at holding on for the next 12 to 15 months. See, I think in terms of the operational performance, Canara Bank has done remarkably well. The loan book growth, the asset quality, the disbursements have been pretty good. And I think, there's a lot of catch up in terms of valuation if you look at Canara Bank and the larger two banks like Bank of Baroda and SBI. Our sense is that, if he can give in a little more time, then I think he could expect targets of at least 380 to 390. So I think that would be a good time to book out some part of the holdings and book out some profits. But till that time, I think I would suggest him to hold. Definitely, you could expect a stronger second and third quarter, and obviously FY24 should be a lot better compared to last year.
All right. Next talk or rather next query is coming in from Advait, who's writing to us from Panvel, that's New Navi Mumbai. And he has about 100 shares of Voltas at a price of around 870 rupees per share. He wants to know what's the outlook for this company in the medium term, and is it advisable for him to go ahead and hold on to this counter for the longer term? What's your take on this, Avinash? Voltas, the buy price is 870. He's making good profits on this, or reasonable profits on this particular holding.
No, I think, I think Volta's management has now aggressively chopped out expansion plans and wants to be a little more aggressive player in the, consumer durable as well as the AC market. And I think the chairman rightly pointed out that possibly the next 2 years are going to see explosive growth for the company. My sense is, I think if the investor has a slightly medium-term horizon, definitely our sense is that, demand is picking up. The company has a very strong market share, and hopefully, if the raw material prices are under pressure, plus the weather season is also good for companies in this sector, then I think you could see better earnings traction. For a long period of time, especially last year, the numbers were slightly under pressure, but I think FY24 has started on a good note. So I think he could look at higher levels, provided he is willing enough to wait in for the next, say, 12 to 18 months. But I think definitely he should hold on. He could expect a better risk reward, if he can hold on for 12 to 15 months.
Okay, moving on. And Kunal, the next query is from Imtiaz from Kolkata, and he's holding 3 counters, and on all of these 3 names he's having a profit. Firstly, he's having Adani Ports 200 shares from a price of 799. He also has 200 shares of JK Paper at a price of 365 and 2500 shares of Tata Steel at 126 rupees. What to do in in all the 3 names? Any stock that you believe that is good to book profits?
I think we should hold to all 3 of them. JK Paper, Adani Ports, Tata Steel, all of them are looking quite charged up. Paper stocks have very recently given a very strong uptrend. All of the paper stocks have moved in a very cohesive kind of a manner. Adani Ports, today the stock has given a breakout after a few weeks of consolidation. And metal stocks, Tata Steel specifically, the stock has not yet confirmed a breakout on the charts. But looking at the other metal peers, I believe it could just be a matter of time that Tata Steel can also get into the thick of a strong momentum. So all 3 of them differently positioned in terms of the chart patterns, and I think you should hold on to all 3 of them.
All right. This next one, that one is coming in from Uday Singh. He's writing to us from Hyderabad, and he's holding about 1,000 shares of KPIT Tech at a price of 650 rupees per share. For the long term, he wants to know whether he should stay put with this one or no. What's your take on this one, Avinash? KPIT Tech for the longer term amongst the mid-cap IT pack, do you think this stands out? Though his buy price is 650, the stock has done exceedingly well for him.
No, I think he's got a decent amount of margin of safety by investing early in this stock. But I think as far as the future is concerned, we believe that, KPIT Tech is one of those companies which will benefit significantly from the electric vehicle kind of segment. And not only India, but even globally, they have large marquee customers. So my sense is that, despite the fact that the stock has almost doubled from his buy price, if he can hold on for the next couple of years, I think the growth momentum and the growth journey for this stock will be quite solid. So continue to hold, and I would not be surprised that further re-rating could be expected, considering the fact that there's a lot of investments which are coming in the electric vehicle sector over the next, say, 2 to 3 years.
Okay, moving on. And Kunal, the next query is on JNK Bank. This one is from Anu from Gurgaon, and she is holding 1,000 shares of JNK Bank near to the current market price, and she entered at 100 rupees. What's the view on this particular counter? What will be the expectation of return from this?
See, the expectations of returns for JNK Bank could be significantly high if you look at it from a technical angle, because the stock has confirmed a very strong rounding pattern breakout. There are a slew of other patterns also which has been completed for JNK Bank. I think more importantly, you have to also look at the leadership. So this month, this quarter, in fact, so far over the last 2-3 months, 2.5 odd month, the stock has gained some 60-65% after having a relative subdued previous 2 quarters for JNK Bank, which means that the stock is getting back into the thick of momentum. Now, if you look at the potential upside, I would expect most of the PSU banking stocks to rally in the tune of 40 to 50% at least over the period of say 1 year, approximately 1 to 2 years. So I think if that's the time span, and if you are looking out for a slightly higher risk appetite, then you should hold on to JNK Bank for a potential upside of at least 30 to 40%.
All right, this one's coming from Krish. This one's for you, Avinash. He wants to invest in Chennai Petro for the next 3 years. He's asking whether it's a good buy. What's your take on this Chennai Petro? Do you think at around 500 rupees per share, it's a good buy for the longer term, or should he look at other counters in the similar space?
So I think as of now, I would believe that it's better to probably wait for some time, because crude prices have started inching above $90 a barrel, and all oil marketing companies, the profitability is dependent on the crude price. Despite the fact that Chennai Petro is basically a subsidiary of IOC, I would suggest that if he at all wants to invest in a oil marketing company, then it's better to invest in the parent, that is Indian Oil Corporation, which seems to be well positioned, in terms of the size, in terms of the geographical reach. My sense is that probably if he wants to invest, he should invest slowly, because considering the fact that the first quarter has been quite challenging for oil marketing companies, if at all crude prices further inch up, then that would actually lead to a little compression on their gross refining margins. So I think it's better that he starts investing in a SIP manner and takes a long-term view. But yes, I think IOC would be better, considering that that would include the entire consolidated entity when he goes in for this kind of investment.
Okay, moving on to the next query then. And Kunal, this one is also for you. This query is from a viewer. He didn't mention his name, but his query is on BF Utilities. He says that he has 25 shares at a price of 600 rupees. He can hold this counter for the next 6 to 8 months and wants your take. The viewer name is Ashish.
See, ideally, I would have said to hold on to the stock because of the way the stock has run up, given a breakout. But the only point of concern for BF Utility is the sudden overbought nature of the charts on the weekly as well as on the monthly charts. So I think on the monthly charts, the RSI as well as on the weekly charts are almost at 88 to 90 plus for the stock price, which means that there could be a significant correction before the stock gets into an uptrend. So it's not as if that the uptrend would stall for the stock at current levels, but it would just be a more of a speed bump for the stock price. So if you're looking to trade into this stock holding which you are holding from the last few weeks, then I think you can probably do that for BF Utility. You can maybe book at current levels and look to buy back in case if the stock dips by say a margin of at least 5% to 10% over the very near term.
All right, this one is coming from Narveev Jadhav, and it's his longest query actually, but I'm a bit confused. So let me just read as he's given to me. He's saying that he had IRFC in his portfolio at a price of 22 rupees per share, 6,000 shares, and he went ahead and he exited the counter at 37 rupees per share. He's feeling bad, but the fact that he lost out on this sharp rally that IRFC has witnessed, now he's saying that he has Vodafone Idea at a price of around 9.55 rupees per share. Kunal, 14,000 shares is what he's having. He's thinking about selling it at 15 rupees per share. It's short-term rate. It's a short-term trade for him. So he wants to know what's the exit rate.
So, in markets, we say that loss of profit is more painful than actual loss. And I am sure that the viewer is, witnessing this. But, disregards, because I think you've earned quite handsomely in terms of percentage gains for your holdings on IRFC. And I think even for Idea, you can continue to hold on. So I think at 11 rupees, the stock seems to be getting back into momentum. I think both the two names, Idea as well as Industar, I think both of them are moving in a synchronized manner. Both of them are heading towards a breakout for themselves individually. So if this breakout sustains for Idea, we can expect the stock to come back towards the previous highs in 2021. I think that was around 15.9 or 16 rupees for Vodafone Idea. So that could be a good point where you may consider booking profits.
Okay, so that's the take coming in on Vodafone Idea. But Avinash, the next query is from Subramaniam from Chennai, and he's holding two counters. Firstly is 50 shares of CESE, which he bought at a price of 85 rupees. And since we were discussing about the whole biofuel theme, so he also has 25 shares of Praj Industries, but his buy price is 349 rupees. Sitting at a good profits in Praj Industries, and today the stock is also of more than 14%. So what to do in both of these counters? He wants a medium-term outlook on these.
I think, Shristi, as far as Praj Industries is concerned, I think he's gotten at a very attractive level. And I think looking at the kind of opportunity for ethanol globally and the kind of very strong order book which the company already enjoys, my sense is Praj is headed very strongly for higher levels in the coming 2 years. They're sitting on a very large order book for ethanol, plus CBM as well as specialty aviation fuel are also products which are very shortly going to be commercialized. So I think he could expect a significant risk reward even from current level. So I would suggest him to hold on. And which was the other stock, Shristi?
All right, moving on then, let's talk about banking space. Kunal, Joyjeet Das from Kuch Bihar is writing to us, and he wants to know whether he can buy PNB at the current levels for the short term. Also, he wants to know any other banking and good banking financial stocks that he can look to enter at current levels.
Well, I'm extremely bullish on the PSU banking stocks. I think just at the start of the show, I discussed that many of the PSU banking stocks are heading towards a huge breakout for themselves. So the point is problem of plenty, because if you go back into the lower end of the high beta stocks or the small cap, mid cap name, the PSU banking stocks, the momentum could be very high, but the risk also attached could be significantly high. So I would suggest that you can stick to maybe a few large cap stocks or a few formidable names in the PSU banking name, PNB, Bank of Baroda, Canara Bank. These three should be your top priority in the PSU banking stocks, looking at the charts. And then you can go out for a few mid cap names like J&K Bank is something which I highlighted earlier. You can also look at Bank of India, Central Bank. These are few names which have also confirmed a breakout.
So that's the take coming in on the banking space. But Avinash, coming back to the previous query then, and you were asking the name. So the name is CESE, where the viewer bought the shares at a price of 85 rupees. So what's the outlook on this one?
I think CSC is largely into power generation, Shristi, and I think power generation companies have been the flavor of the market. My sense is that if the investor can hold on for the next, say, 12 to 18 months, I think you could expect a decent risk reward here, considering the fact that, in Eastern India, CSC is a very large power generating player. And more importantly, has been a very profitable player ever since, its inception. My sense is that he should hold on. He's gotten at a very good price of around 85. He could expect a price target of almost 125, 130 over the next 12 to 15 months.
And on that note, we slip into a break on this edition of Buy Now Sell Now. A quick note for all of our viewers: please do not call on the WhatsApp number that has been shared. We will only be able to take queries if you write to us, and please do note we have a lot of queries that are coming into us, so you will get your turn. But on that note, we slip into a break on this edition of Buy Now Sell Now. Stay tuned. More on the other side. Don't go anywhere.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And for today, onto the expert side, we have Kunal Bothra as well as Avinash with us to help you better. And moving on to your queries then. And Avinash, the next query is coming in on Tanveer from Ranchi. He's holding 500 shares of RVNL, bought at a price of 137 rupees, and the stock has been on the roll, no doubt there. And he also has 500 shares of Lemon Tree at a price of 92. So what to do in both of these counters?
As far as Lemon Tree is concerned, Srishti, I think he should hold on. I think within the hotel pack, especially the affordable hotel segment, Lemon Tree has been aggressively adding room inventory. And I think over the next 2 years, we could see a significant increase in room inventory. And I think overall, I would believe that, looking at the kind of buoyancy in the tourism market, plus, large events like G20, the World Cup happening in October, November this year, is going to mean a lot of business for the hotel sector. So I think one can definitely hold on. One could expect a price of around 130, 140, provided, the investor is willing enough to take a 12 to 15 month kind of call.
Right. The next query that I have is coming in from viewer who's actually asked about. Just a second. Yes, this one is a viewer who's not mentioned his name, but he wants to know about Garden Reach. Actually, Kunal, he wants a target for this particular counter. He has 100 shares of Garden Reach at 320 rupees per share. Should he accumulate more or book up profits?
No, you can continue to hold on. You can probably look to maybe trail your stop losses to 800 on closing basis. In this last leg of uptrend, the stock had adhered to a previous support of 600 broadly. So I think except for that one day when the stock closed below the 600 levels, around 582 mark, from there the stock had not gone below the 600 mark in the previous range of consolidation. So probably this time around you can keep 800 as a trailing stop loss and continue to hold on for GRSE.
Okay, moving on, and before taking the next query, then just have a look at the AMFI data for the month of August. On the bottom of your screen, you can see the flashes on there because this time around the net inflow has come in at 14,386 crores versus an inflow of 82,046 crores. That's coming in on a month-on-month basis, while the equity inflows has been quite robust at 20,245 crores, a little bit of inch up onto the total AUM as well, and the equity AUM now stands at 18.3 lakh crores for the whole industry. So that's the AMFI data for the month of August, but the key to watch will be the SIP number, because last time around that did cross that 15,000 mark. So all eyes on that how SIP data pans out to be. We're moving on to the next query then, and continuing with the query on LIC. Avinash, the viewer named Abhijit from Panvel has bought 15 shares at a price of 900 rupees since IPO. He's been holding this counter. So at this point in time, continue to hold on, because we have seen a decent move on LIC recently, or you would advise to average out this particular name as well?
I think if the investor has a couple of years in mind, then I think he should definitely average out. I think many retail investors have got stuck up after the public issue of LIC, because ever since the IPO happened, the stock has not given any kind of decent returns. But I think looking at the opportunity for insurance over the next say 2 to 3 years, and the fact that LIC commands a large 40 to 45% market share, and plus the fact that the management has reiterated that they want to make it a more profitable organization by focusing on very profitable kind of policies. I think it's a matter of time. In near term, the investor could lose out, but in the longer term, I think if he averages, I think he could definitely expect a decent risk reward. So I wouldn't suggest him to book out in a loss, but I think he can average and take a 2-year view and continue to hold.
Next query, a longish one coming your way. This one is from Sagar, and this is about a Pathshala topic that we did speak about 2 weeks ago, and that is on RSI. He's saying that he's currently holding a stock which is currently at 85 plus RSI on daily time frame and 90 plus RSI on the weekly time frame, and this is happening for the last 6 months. Despite that, he's saying that the stock has actually has doubled with multiple divergence and is still seeing a continuous uptrend. So he wants to know whether he should still continue to hold on to the stock or look to book profits, just looking at the overbought and oversold levels. Also, he wants to know if RSI or any other indicators can be manipulated to keep the stock higher for a long period of time. Also, he's not mentioning the stock because he doesn't want to jinx it. He's saying it's a 3,000 crore rupees market cap company.
No, that's fine. Naming the stock would not be any different in terms of the view. Manipulation, the point which you mentioned, I have no idea of how that happens. So you'll have to explain me how that happens. I look at it as purely the technical charts, and of course I'm assuming that it's a liquid name. Now the other way to look out for is that if the RSI on the daily charts is lower than the RSI on the weekly time frame, which means that the stock has actually gone through a consolidation or a correction and is now looking quite strong. So when a stock goes into zones of breakout, so for example on the daily charts, if the RSI is much higher as compared to the weekly, it's called as a recent breakout. If the daily charts RSI is lower than the weekly as well as the monthly, then the stock would probably have gone into a consolidation prior and then coming out of a consolidation. So that is generally considered to be a healthy sign. RSI is not typically meant in terms of levels. That 80 plus is a zone to sell or 90 plus is a zone to sell. It's a zone to be cautious, because the risk reward goes out of a hand for most of the stocks which enter into overbought territories. And the last and final point is that when traders look at RSIs of 80 plus, 90 plus, you also have to look at the entire market. If the markets are into a fine fettle, then RSIs of 80 to 90 can also be considered as a good buying opportunity. But then the risk associated with those kind of RSIs would be almost 1:1 in terms of risk reward, or much lower than 1:1. So that's the whole and soul of how do we trade RSI. Just looking at the numbers may not be a good strategy to try and exit or initiate fresh longs.
Okay, thank you so much, Kunal, for that detailed explanation on how to actually look at and trade on RSIs. But moving on to the next query then. And Avinash, the next query is on Dhanuka Agritech. Gautam has bought these shares from a price of 700 rupees at a profit in this particular counter. But good time to book profits or continue to hold on?
No, I think he should continue to hold, considering the fact that the entire agrochemical space has seen a lot of pain. But I think he still managed to make a decent money in Dhanuka Agritech. Our sense is that possibly the September quarter also could be a timid, mild quarter, but thereafter I think a lot of inventory restocking which has happened will balance out, and I think you're going to see a good bounce back for the next season. So I think if we can hold on for the next say 12 to 15 months, obviously I think Dhanuka Agri can be a good pick for him. He should earn a decent risk reward, but I think all that should possibly happen in the next season when the inventory destocking effect gets completely eliminated. So I think continue to hold, keep a time frame of at least 12-15 months.
This next one that is coming in from Poonam Mandan from Punjab. Kunal, 150 shares of UPL at 622, as well as 50 shares of TCI Express at 1,478 rupees per share. Not mention what she wants to do in this counter, but on the charts, how are they looking?
So I'm assuming that you're going with a strategy of bottom fishing for both of these names. UPL, the stock is trying to come back towards a breakout of 50 moving average. I'll wait out for maybe another couple of days, or till the time the stock breaks past about the 50 DMA. That would be the first level of confirmation of a breakout for UPL. So you can probably hold on to the stock as of now, but then wait out for that confirmation if you're looking to add further quantity. For TCI Express, the charts are very, very similar. The stock is heading towards a breakout of the short-term average. So maybe a breakout about the 1660 mark for TCI Express, which is around 100 plus points from current levels, is where you can get a confirmation that the stock has ended its major correction and is now getting into a breakout mode.
Okay, Kunal, once again coming to you because this query is specifically for you from Rao from Baroda, and he has bought 30 shares of Clean Science Technologies from a price of 1,560 rupees. What to do in this particular name? Because what we see is that since the launch of the IPO, the stock has given negative returns, but now trying to make a comeback. Good to hold, or maybe he can average or add more at current levels?
Good to hold so far. In fact, the good part is that the stock is ending its lower highs and lower lows pattern on the monthly chart. So from 2021 end or 22, when the stock started to correct from 2,600 levels, corrected to more than 50%. I think for the first time on the monthly chart so far, it's showing signs of a potential breakout. Now this could be a very strong potential indication that the stock may have formed a major bottom at the 1,300 levels and could be good for decent momentum over the next 1 to 2 years. So if you're a long-term investor, you should stay put.
Alright, this one is coming from Shamala from Hyderabad, and Avinash, this one is for you. She has 90 shares of L&T purchased at 2,124 rupees per share, has about 50 shares of HAL at a price of around 3,082 rupees per share. She's making 30% plus profit on both of these holdings. Now she wants to know, should she go ahead and book some profits in these counters or stay put with them? She's a long-term investor and also is looking to keep these stocks as a way of wealth creation. So do you think that it makes sense to book out partial profits in these counters and stay put with them for the longer term?
Cheryl, I think as far as HL is concerned, I think it's a pure defense play, and I think the kind of announcements which have come in from the G20 summit clearly point out that defense is going to be a very big multi-year theme. So I wouldn't suggest the investor to book out in a hurry, considering the fact that it already has an order book of more than 50,000 crores. More importantly, visibility for the next 2 years is very strong. I think some more announcements, post the G20 summit could come in, and I think that could definitely help HL quite significantly. So I think continue to hold. One could expect a decent upside over the next, say, 1 to 2 years.
That's the take coming in on HAL. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
All right, moving on then. Let's continue taking your queries and welcome back to Buy Now Sell Now. Let me take the next query then that I have, and this one's come from Anjali writing to us from Chandigarh. And Kunal, Nureka is the counter that she's asking her query on. 140 shares at a price of 762 rupees per share. She wants to know whether she should go ahead and sell the counter. Not Eureka Forbes, it's Nureka. Abhishek here.
So yeah, I think at 376, if I'm not wrong, where the stock is trading right now, closer to its 200-day moving average. So it's on the verge of confirming some sort of a trend reversal breakout for itself. So just basis on this, I would suggest a hold for Nureka. But then, frankly, it's not a stock which I do track very closely. So because of the way the stock has positioned itself, just around the 200 moving average breakout, I would suggest a hold.
Okay, that's a hold coming in on Nureka. And the next query is on Carborandum Universal. Avinash, what's your take on this one? Thomas George from Kochi has bought 500 shares at a price of 1100 rupees a piece. So at this point in time, is that a buy, sell or hold at current levels?
I think Carborundum is a hold. It belongs to the Murugappa group and is one of the larger abrasive players in India. I think a lot of activity is happening on the electric vehicle side, and I think the company is now doing a lot of R&D in developing products for the EV sector. See, our sense is that over the next 2 years, you could see a lot of traction coming in from the EV segment. With the economy picking up, I think core sectors also contribute significantly to the company's top line. So I think it's a hold. This investor has entered the stock at a slightly higher level, but I think if he can keep a time frame of 2 years, I think he should definitely get a decent risk reward.
All right, the next one that I have is coming from Samrat. He's writing to us from Bangalore, and his query is for you, Kunal. 200 shares of Tata Motors purchased at 291 rupees per share, 300 shares of Tata Power purchased at 100 rupees per share. What's the outlook for the long term for both of these counters? He's making good profits on both of them. Do you think he should stay put for the longer term?
I think yes, I think you should continue to hold on.
He should hold on.
Okay, next query is on South India Bank. Avinash, what's your take on this one? This query is from Sudeep and he has bought the shares at a price of 20 rupees 40 paisa.
South Indian Bank has done remarkably well in terms of the financial profitability, in terms of the balance sheet, as well as its CASA ratio. More importantly, the smaller banks have been generating a very strong profits. And I think the alpha generation year going forward also should be pretty strong. So probably a price target of around 29.30 is very much possible for the next 12 to 15 months. So continue to hold.
All right, with that, let's actually kickstart with the rapid fire then. And the first one that I have is coming in from Subramanian, writing to us from Chennai. Kunal, ITD cementation at these levels, can you look to buy this particular counter?
Well, yes, I would suggest a buy.
Okay, Avinash, Gayatri is holding shares of Anthony Waste Handling at a price of 361. Continue to hold on or book losses?
I think continue to hold, but keep a time frame of at least 12 to 15 months.
Okay, this one is coming in from Ajit. 130 shares of Avalon Technologies at 662 rupees per share, purchased in the third week of July. Long-term investor, should he continue to hold? If yes, then till when? He's writing to us from Bangalore. Avinash?
I think you should hold on. The company had a bad Q1, but I think the order book is pretty solid. So I think continue to hold for the next 12 to 18 months.
Okay, Kunal, Bhavesh has bought shares of SCI from a price of 100 rupees. Sell or hold this name?
Would recommend to book at least 50% profits.
All right, this one is from TP Vinod. Kunal, Aavas Financiers 150 shares, a price of 1,750. What's the short-term to medium-term target?
Short-term targets you can keep closer to 1880, and on the medium term, which is the next 6 months, you can look out for 2,200.
Avinash, Sampath is a long-term investor, bought 100 shares of LIC Housing Finance from a price of 399 rupees. What to do in this one?
I think he should hold on, another 12 to 15 months. Housing finance has taken off quite well for LIC Housing Finance. So continue to hold, keep a time frame of at least 12 to 15 months.
Kunal, this one is from Rima. What's the near-term target for CDSS? She's holding 55 shares at a price of 1,096 rupees per share. She's saying the sharp rally that the stock has seen recently is pretty scary.
I think it's sustainable. The stock can come back towards 1600 mark, which is the previous high 2021-22.
Okay, Kunal, what's your take on Tanla Platforms? Partha has bought 100 shares at a price of 755 rupees. What to do in this particular name?
Completed a retracement around this 950-60 mark very recently, and I think should be up for 1200 plus over the near term.
Okay, is it a good time to buy Hindustan Copper at current price for a period of 12 to 18 months, Avinash?
Yeah, I think if the investor has a 12 to 18 month horizon, I think one can accumulate here.
Kunal, what's your view on Alembic Pharma? Ramamurthy wants to know, is this a good time to invest in this name?
I would suggest a wait, buy closer to 700, 720 mark.
All right, and with that, we come to the end of the rapid fire as well as queries. Thank you so much, Avinash, as well as Kunal, for joining us on the show, talking about the ethanol players and where they are headed from here, and also taking your queries. And with that, viewers, we are totally out of time on this edition of Buy Now Sell Now. Goodbye from Shrishti, myself, and the team that put the show together.